Welcome to the CoinStories podcast, where we talk about investing, hard money, Bitcoin, and how technology is revolutionizing the global economy. I'm Natalie Brunell, and I'm here to learn with you. So this is for educational and entertainment purposes only. None of the discussions should constitute as official investment advice, and you should always do your own research. This show is made possible through partnerships with companies I trust, and I'm very picky about who I partner with. So I hope you take the time to listen to the ad reads throughout the show. First up, Swan. I partnered with Swan because it is a Bitcoin-only company that is focused on helping people save for their future and self-custody their Bitcoin. Swan can help you start a direct deposit to take advantage of Bitcoin as a savings technology and learn how to take it off the exchange. Swan's mission is to educate 10 million future Bitcoiners through free resources and media projects like The Hard Money Show. Swan also offers retirement planning with an IRA, tax loss harvesting, and a white glove private client service. I use Swan to dollar cost average, and I deposit a little bit every day that's equivalent to what I might spend on a meal so that I add to my future nest egg and lower my yearly cost basis. Swan Studios produces my hard money news reports, simplifying Bitcoin for mass audiences and documenting Bitcoin adoption around the world. To learn more and get $10 in free Bitcoin, head to swanbitcoin.com/Natalie Brunell. All right, next up, Bitcoin Conference 2024. The world's largest Bitcoin event is headed to Nashville next year. Early bird tickets are now available, and this is the lowest cost you'll be able to secure for the conference all year. And if you use the code HODL, HODL, you'll get an extra 10% off. So come join us for 3 great days of networking events, panels, keynotes, workshops, and more. You never know what big name might be announced when tickets are much, much higher in price. Head to b.tc/conference and use the code HODL. I'll see you there. All right, it's time for the show. It is great to have the one and only Michael Saylor back. Thank you so much for joining me. There's so much to talk about. Over the next 12 months, we're going to have a halving, potentially a spot Bitcoin ETF approved. We've got FASB rules changing. So, Michael, thank you for joining me. First of all, how are you?
Always happy to see you, Natalie.
So tell us, what do you think your outlook is for Bitcoin over the next 12 months, given all of these developments and the regulatory environment really changing with so many actions coming down recently?
Bullish. I've never been more bullish. I think that all the indicators are very auspicious. If we look at the situation we're in right now, I think there's never been more clarity or differentiation for Bitcoin as the dominant crypto asset than today. I think we've got pretty good clarity and universal consensus that Bitcoin is an asset without an issuer, that it's a global asset, that it is a non-sovereign store of value strategy for someone seeking to escape currency debasement. And I think the fact that Larry Fink, running the world's largest asset manager, vocalized all those ideas on public television of late was a milestone for the space. I think the second milestone for the space is the groundswell of positive sentiment for Bitcoin, both in the form of overall crypto positivity and Bitcoin positivity. The statements by Ron DeSantis emphatically supporting your right to Bitcoin, the statements by Robert F. Kennedy emphatically supporting your right to Bitcoin, the disclosure that Kennedy actually purchased a bunch of Bitcoin for his children publicly is a big step forward. I think the fact you have 2 other presidential candidates, Mayor Suarez and Ramaswamy, also announcing support for Bitcoin, I think those are really big deals. So that combined with the regulators endorsing it, the CFTC and the SEC, combined with the tone and treatment of mainstream media. If we look at the treatment of Bitcoin in the mainstream media, both across CNBC, Fox, Bloomberg, the Wall Street Journal, the Times, and the like, I think you could see a market rotation of sentiment over the past 2 years from one of incredulity and suspicion and fear and concern to respect, either a grudging respect or this, or I guess this thing is more than we thought it was. So that sentiment has changed. I think it's pretty clear that there is support for Bitcoin in both parties, in the Democratic Party, the Republican Party, and at the White House level. And I think there's obviously has been universal support for Bitcoin across the crypto ecosystem. And the regulatory developments of the past 6 months, if anything, they've increased uncertainty around everything else in crypto. The crypto exchanges, the cryptocurrencies that are stable coins, the crypto securities, the crypto tokens, the crypto exchanges and DeFi networks. The uncertainty there is still there, if not greater, but they've increased the certainty around Bitcoin. All of the companies, the large financial companies filing for a spot ETF, companies, all the Bitcoin miners continuing to operate, companies like MicroStrategy and asset managers, all of them moving forward with Bitcoin. I think that's been very auspicious. So I feel like we're at an inflection point. It's a point at which you have the most information to conclude that Bitcoin is a differentiated international asset, store of value, and digital commodity, and unique in the world and useful to the world. You have the most information to conclude that. And yet, the ability of the retail public and the ability of institutions and governments is still largely impaired to act on that. Mm-hmm. It's very difficult for a retiree with a pension fund to make an investment in Bitcoin. It's very difficult for a large corporation to invest in Bitcoin. It's difficult for a sovereign wealth fund. It's difficult for a government. It's difficult for a hedge fund. And so you have an example where you know where the world is headed. You know what the world needs. Rational people will eventually get there. You also have a list of reasons why it's difficult, right? Why is it difficult? It's difficult because the accounting is indefinite and intangible instead of fair value. So you have a challenge, and you have a solution, a process to create fair value accounting with the end of the tunnel clearly in view. If it's not happening by the end of the year, it's happening within 12 months. You have a challenge. I can't buy a spot ETF. You have a solution. You have a host of spot ETF applications that are in version 3, right? People have been trying to do it. We must be on version 4 or version 5 iteration. Yeah. But you have version 5 that are much more compelling than the previous version, and you have a lot of political pressure and sentiment and conviction to support it. And that is a solution, right? You have a challenge. We need a digital assets exchange to be transparent and regulated. You have a solution, surveillance agreements. Coinbase has already agreed to a surveillance agreement publicly with half a dozen or more of these ETF filers. You have a process. The SEC, the CFTC engaged in bringing exchanges into compliance. So you have all these challenges to action. You have all of these solutions in play. It's really just a matter of which quarter, how many quarters does it take before we put all the solutions in play. When the rails go in place, then there's a huge amount of capital that will flow against a limited supply. So you have, if we look at the demand side, my description here is buying Bitcoin is like buying a beautiful house, in a foreign neighborhood, and you have to pay cash up front, and it takes you a year of work to do it. Whereas buying Bitcoin via spot ETF is like buying the same beautiful house in your neighborhood with no money down tomorrow. And so there are many, many people that will not buy a house if they have to pay in cash, even ever, right? Like there are many people that will never, ever buy a house in cash. One could say the great majority. And there are many people that will say, I would pay 20% more for that house if I could finance it at the bank. So we have a large pool of capital that would love to be in the space, but they can't easily do it without things like Bitcoin securities or spot ETFs. And so that's going to be a big catalyst for demand. And we already know it's coming, and it hasn't come, which means it has not reflected itself fully in the price. Now, on the other side, we have two facts about supply. We know that there will never be more than 21 million Bitcoin. That's the overarching important first order fact. And the second order fact we have is that there's a halving coming that will cut the supply that the miners have available to sell in half, and that's nearly $5 billion a year worth of supply. And then we have a third order fact. The third order fact is if large institutions can now comfortably own Bitcoin on their balance sheet, they're going to buy it and hold it forever. And the people that hold it now aren't going to want to sell it. So the supply available for sale from existing holders is going to decrease. The supply available for sale from miners is going to decrease. And yet the demand to purchase it will increase. And the duration, right? The amount of time that someone wants to hold this asset is going to is going to increase. If you decide to buy Bitcoin and hold it for a year, then that means every year 10 billion is being bought and 10 billion is being dumped on the market. But when you decide to buy Bitcoin and hold it for a decade, that means every year 10 billion is being purchased and 1 billion is being dumped on the market. So all of these things put together, they increase the demand, they stretch out the duration, they decrease the supply, and they decrease the friction to anybody to act in the favor of the network. So put them all together, and the summary is never been more bullish.
Well, I wanted to ask you about the spot Bitcoin ETFs, because at the start of the year, there was probably only a 1% chance that one of these would be approved. Then it moved to 50%. And I think you mentioned in one of your latest news hits that Bloomberg analysts say it's up to like 65% that they will be approved. Why do you think right now there is so much momentum and action around these? Why now?
Well, first of all, there's broad-based demand everywhere in the world. Right? Everybody wants to buy Bitcoin, but they want to buy Bitcoin through their existing money manager or financial manager or bank. And that means pick up the phone, buy $10 million worth of it or $10,000 worth of it in 30 seconds. So there's demand at the retail level and there's demand at the institutional level. And in order to meet that demand in size, people need a security like that travels on the conventional Wall Street rails, right? We've talked about it. It's just like everybody wants a house, but if everybody has to work for 30 years, save cash, and then at the end of their career, take the cash to the bank to buy the house, demand for housing would be 5% of what it is right now. So there's broad-based demand, and that's building. The second is there's massive political pressure from everybody. The industry has brought a huge amount of pressure on the regulators and huge amount of pressure on the political system. We see a massive amount of political pressure coming from the House Financial Services Committee, and the pressure is to do something. We're approaching an election year, and it's in the best interest of both parties to be constructive and to do something that's progressive for the voters. And, there really isn't a constituency that doesn't like Bitcoin, right? You're either ignorant of it and you don't know anything about it, or you're extremely pro-Bitcoin. So politically, it's very advantageous to do something pro Bitcoin here on the Republican side and on the Democratic side, and it's the least controversial, most constructive thing that can be done. And what you have is just a large amount of pressure in the industry and in the media and in the political system to do something. And you have now Wall Street firms, Blackrock and Fidelity, lining up again. So that's why you would say it's 65% likely. I think the other thing that's driving it is the awareness that simply relying on the litigation or the legal system to resolve ambiguities is not optimal, right? If you want to solve the problem with litigation, it's going to take 5 to 10 years. It's going to cost $100 million an issue, and you're going to get a Delphic answer, which is ambiguous at the end of the time period that covers 10% of the scope. So the industry knows that that litigation is not going to solve the problem. I think politicians realize litigation will not solve the problem. Even the regulators are starting to realize that enforcement and litigation is not going to solve this problem. So that means there's just there's a lot of pressure on two groups. There's pressure on the regulators to put forward some constructive path, clear rules or constructive path forward for this innovation to manifest itself. And then there's pressure on the politicians to put forth constructive legislation to allow people a path forward. And that pressure has been building. I think probably just immediately in the aftermath of FTX, people were shell-shocked, right? But if you look at every month since then, right, the sentiment is the regulators ought to do something, the politicians ought to do something, right? And the industry's gotten louder. Mm-hmm. And then support for Bitcoin and awareness of the value of Bitcoin has only increased and not decreased. So I think that all of the forces at play here are compelling action. And the question is, what's the most likely action or the path of least resistance for that energy to manifest itself in? And there's a lot of things people would like, but by far, the universal consensus, if you were to take a vote of 100 people in the crypto industry and say, are you in favor of a Bitcoin spot ETF? You would get 99 out of 100 saying, of course, why not? Right? So it's the one thing that is least controversial, that has the most consensus. And it looks, I think there's one more factor. It looks capricious to keep denying it. Mm-hmm. when there is a futures-based ETF that is currently trading on futures data. And a year ago, you might have made the argument that a technical argument, well, the futures is good enough and it trades on the CME and it's good enough. And we like our surveillance agreement with the CME better. You could have made that argument. The difference between today and a year ago is that this year, Bitcoin is up 75% and the futures ETFs are up 45%. So this year, what's happened is the futures have disconnected with the underlying index. So futures ETFs aren't really tracking Bitcoin right now. In fact, they're kind of destroying in the range of 10 to 20% of your capital a year. So that being the case, it's clear to any quantitative analyst or investor that futures ETFs don't provide an on-ramp for a reasonable investor without serious wealth destruction. And so I couldn't in good conscience recommend that you use a futures ETF when I know it's going to cost you 10 to 20% of your capital every year for no reason, other than the fact that the futures market isn't the strategy of using futures isn't an effective way to track the spot Bitcoin price. It just isn't working. So there you go. You've got one idea not working. You've got another idea that should work. You've got massive demand. You've got massive pressure to do it. And at some point, that pressure's got to find a release valve.
Well, I want to ask you about some of these other vehicles that already do exist. But first, for the hardcore Bitcoiners out there who feel that the whole mission behind Bitcoin is to be self-sovereign and to self-custody it, who don't trust and don't want, third parties to be involved at all, what do you say to them and their distrust for companies like BlackRock and some of these big Wall Street firms who maybe they feel have contributed to some of the wealth concentration and erosion of the American worker?
I would say that Bitcoin fixes everything. And so if we think about what that means, Bitcoin fixes everything, and we need to be prepared for Bitcoin to infuse everything. You're an individual, and so you believe being a sovereign individual, so you buy Bitcoin and you hold your own keys. Okay, good. Now you get married, and now there's two of you, and one of you doesn't want to do the work, so the other one takes responsibility, and so now one of the two of you in the marriage holds the keys. Okay, that's a family. A family should be able to do it. And then you have, so then you have 4 kids and 16 grandkids, and the children are 3 years old, and you're going to hold some Bitcoin for the 3-year-old. And then eventually you have grandparents and they're 85 years old and they don't use computers that well. So now the family becomes an extended family with 28 people, and perhaps 2 people or 3 people hold the key. So now you've got a little Fetty man, or you've got a multi-sig, the family treasury. What do I say to the people, the 85-year-old in the family that says, I want to hold my own keys? Well, my answer is they're not saying it, right? Like the 3-year-old and the 1-year-old and the 85-year-old is not complaining that, their 2 sons or the mother and the father hold their keys, right? Any more than I didn't complain that my mother and father had the car keys when I was 12 years old and I didn't get the car keys. The answer is families are going to have there's a custodial relationship, right? You're the mother and you have 6 kids and you have the car keys and they don't have the car keys and you drive them to school in station wagon. That's custodial. Mm-hmm. Like what I have to say is that's fine, right? It's okay to be an individual. It's okay to be a couple. It's okay to be a family. Now, after that, you're a school. Okay, so when your school actually has 400 people in it and an endowment and it's a private school, and they have a multi-sig relationship and there's 3 people or 5 people on the board of directors that hold the keys, is it okay that the 500 parents don't? Is it okay that the 500 kids don't? Okay, what about the country club? What about the church? Is it okay, that 10 people hold the keys for 1,000 people in the church? Now you get to the city. Well, what about the city wants to have a Bitcoin endowment? Do we give the keys to the mayor of the city? I wouldn't. I mean, I think that maybe the city council might have a multi-signature thing, but there's going to be a custodial relationship there, right? And then should you be able to start a company? Can the world exist without companies? No, we need companies. We need companies to create food and operate restaurants. So if the guy that runs the restaurant wants to have a treasury, is it okay for the CEO of the restaurant, right, to have some Bitcoin? And then now the question is, well, what happens when you have a pension fund or a union or a university endowment? Well, as those things happen, you're going to have other types of custodians. And then what happens if a country wants to back its treasury or put Bitcoin into its treasury? Well, countries are not going to let the Secretary of the Treasury hold the keys on behalf of 50 million people. So I think the right way to think of it is Bitcoin is going to be a base layer, and there's going to be layer 2s like Lightning to move things fast, but there's going to be layer 3s that are custodial, like Cash App, like Coinbase, like Fidelity, like JP Morgan, like Bank of America, uh, like Apple, like Google. They're going to be custodial layer threes, and they're going to exist either to provide functionality, like do we want a billion people on Apple iPhones to be able to move Bitcoin instantly from the iPhone using the Apple iOS? And the answer is probably yeah. So there are going to be technical reasons to trust a third party. There are going to be political reasons, like the mayor of New York is the mayor of New York, and we put someone in charge of New York. So when New York wants to hold Bitcoin, you're going to have New York as a custodian, New York City. So there's a political reason. Unless you get rid of New York City, and I don't think California or New York City or the United States or Iceland as a country, I don't think they're going away this decade. So I think there are going to be political distinctions that cause the need for custodians. Then I think there are also going to be other sorts of natural reasons, like I have Alzheimer's and I'm 85 years old, and who can I trust? Or I want to leave it to my unborn grandchild in a trust. Okay, how do I do that? And so I think the best way to think about Bitcoin is Bitcoin offers sovereignty and integrity and empowerment, not just to the individual, but also to the family, the clan, the village, the city, the county, the state, the province, the country, the company, the institution, the agency, right? The group, the community organization. Every one of those entities, they all have their own agency, and we don't want them to not have access to this, right? Bitcoin makes your country better, makes your company better, makes your family better, makes your community better, makes your school better, makes you better, right? It's gonna make everything better, but there are different types of wrappers we need to put it in. Some people will always be, self-custody. Some will be multi-sig. Some will be multi-sig layer 2. Some of them will need a layer 3 custodian. They'll either need it for political purposes, or they'll need it for utility purposes or functionality purposes, or they'll need it because they're wrapping it into another good or a product or service that they're offering that runs on that layer 3. So we shouldn't be afraid of those things. Someone said, well, are you afraid that these big organizations are going to buy Bitcoin and centralize it? And I said, well, it's like asking me if I'm afraid that someone in Japan is going to speak English and if that's going to undermine the English language, right? If Samsung is the biggest company in Korea and they start speaking English and they build support for English into their products, does that corrupt the English language? No, it actually makes English better. They're going to use it differently. What's the likelihood that Samsung can change the definition of love or change the meaning of 100 different words, by adopting it? It's like not likely, but so I think that it's a protocol. The protocol is going to infuse everything, and we shouldn't be afraid of all the different ways that people choose to integrate, wrap, embed, or execute with Bitcoin. There's no one right answer, and the marketplace will determine the right mix of integrations of Bitcoin.
It's time for a quick break to hear these messages from my partners. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to groceries to your Bitcoin conference tickets, with Fold's Bitcoin cashback debit card. And you can win free Satoshis every day, or even play for a whole Bitcoin by spinning the rewards wheel. You can also buy Bitcoin and stack sats directly on Fold and earn even more incentives and rewards. This is a great app to get someone totally new into Bitcoin, and way better than earning airline miles or hotel points. Head to foldapp.com/Natalie. And if you use my link, you'll get up to 10,000 sats when you sign up for Spin or Spin Plus and spend at least $20 on the card. Well, just like you said, there's going to be a lot of different options in the marketplace. There already really is. I think it would be really interesting to hear you maybe talk about the difference between what currently exists, a futures ETF. There's GBTC that a lot of people hold. There are a lot of questions with because of the Grayscale lawsuit, but that was for some the first way to invest in Bitcoin for their retirement. There's MicroStrategy, and then there's this theoretical spot Bitcoin ETF. Can you maybe break down the differences in these investments?
Sure. Well, let's start with the base layer, Bitcoin. So Bitcoin itself it's the pure asset, and it's the atomic level asset. So the value is it's the pure commodity within the asset without an issuer, and the most global, most timeless asset with the most optionality and the least counterparty risk. Theoretically, no counterparty risk, but unless you worry about like some core dev campaigning to change the protocol, but fairly, it's the global standard for a digital commodity. What are the challenges? The challenges are you can't finance it. So if you want to buy it, you have to actually establish a new relationship with the crypto exchange. You have to put cash up front, and so that could be a scary proposition. It would take a typical investor a year to vet a new exchange partner, and then they would have to change their charter, has different tax consequences. Sometimes they're not allowed to buy property or a commodity asset. They can only buy security. So it's a different type of asset with a different purchase channel. And then you have to come up with a custodian that you trust, or you have to come up with a custody protocol. So if you're a pension fund, the issue is which of the people in the pension fund get the private keys? Is it one person, three people, or do you trust a custodian? You'll probably have to choose an institutional custodian. So choosing an exchange and choosing a custodian, changing your charter, and vetting everything, that's going to take you a year. And then after you do it, if you want to buy $1 million worth of Bitcoin, you have to have $1 million in cash. So that's the challenge. The advantage is you can hold it forever and you can transfer it to other counterparties without a taxable event after you've owned the Bitcoin. So if you're going to hold it for 100 years and you're really focused, then you want to own the asset, the pure asset. But if you're an agency, an endowment, an institution, a corporation, they typically want to be able to use their existing bank, and they want to be able to use, and they want the bank to be the custodian, or they want the money manager to be the custodian, and they don't want to pay money. I mean, they want it on credit, right? So coming back to the home buyer, really, you just want to buy the house and get the bank to give you 100% mortgage, right? That makes it easy. So a spot ETF would be the ability to buy that asset, and you buy it through your existing bank, like Bank of America or JP Morgan or the like, and you buy it for almost no transaction fee. If you can get effectively a 5 or 10 basis point transaction fee or less in the ETF, you would buy it instantly. Instead of taking a year, you could do it in a minute. And instead of coming up with $1 million, you would just ask the bank to give you the $1 million of financing at 5% interest. So the bank will forward you the cash. It's like buying it instantly, no money down. And then you don't have to change your charter. You don't have to adopt or trust a new exchange. You don't have to trust a new custodian. Most of these institutions, Natalie, if I were to say they've been doing business with the same bank or the same investment company for 20 years, that would be short. Most of them have been doing business with the same investment company for 40 years or 50 years. But 40 years is not unreasonable. So you're talking about a publicly traded company, Apple, Amazon, Microsoft, Google. They've got relationships since they were founded, and they could buy $1 billion of Bitcoin in a minute, no money down, on a phone call. And no one would say a second thought if it comes through a spot ETF. But if they were to say, I want to buy $1 billion of Bitcoin, the commodity, they would need to have 16 board meetings, 100 lawyers and accountants review it. They would have to go through all sorts of contortions. They would have to dedicate a team of 5 people. They would have to draft 1,000 pages of operating procedures. There would be endless debate, and they would have to come up with $1 billion of cash, right? So the difference between Bitcoin and the spot ETF is profound for the institution. Now, the spot ETF is 1-to-1 leverage. You put $1 million in and you got $1 million of Bitcoin, and it's probably a fee anywhere from 50 to 100 basis points. So that means that every year you're going to pay up to 1% of your assets in order to hold that position. So what that means is over an indefinite time period, that means that 20% of your assets go to the trustee or the operator of the ETF or the money manager. So when you buy the Bitcoin directly, you might be able to get in size, if you used a custodian, you might be able to get to 5 basis points a year of a custody fee. And, at $1 billion or more. If you're a spot ETF, 50 basis points would be the cheapest. So 5 basis points times 20 means that if I buy $100 million of this, I pay $1 million in custody fees over the lifetime of the asset. And on the other hand, at 50 basis points, then when you buy $100 million of it, you have to multiply that by 20. And that means over the course of the duration, you pay $10 million, right? Instead of $1 million. So it's more expensive to go through that operator. Now, if you go to the idea of the other advantage of having the ETF is there will be an options market and a put and call options market, and that means that you can sell volatility and generate yield of some sort by giving up upside, or you can hedge downside. It's not a strong options market, but it is an options market. Mm-hmm. Now go to the futures ETF. The futures ETF is probably double the cost of the spot ETF. And so now you're talking about, instead of paying 10 million over the course, you're paying $20 million, right? So you've gone from 1 million to 10 million to $20 million in manager fees. So it's gotten more expensive, but that's not the big cost. The big cost is you have $100 million invested and you lose 20% performance. So you've lost 20 million a year for 5 years, and you're losing all 100 million over 5 years. So
it's underperformed. Yeah.
If you want to use a snarky phrase, right, you would say the spot ETF is like you bought the beautiful house across the street and the bank financed it all. But the futures ETF is you bought the same house, but it's on a lot with a sinkhole, and the entire thing's going to sink into the sinkhole in 5 years. And it's collapsing. So you can see you don't really want to make your financial foundation on sinking sand. And that's what the futures are right now. And there's no reason to think it's going to change. We don't see it. So then you go to Grayscale. Grayscale is it's a closed-end trust or a closed-end fund, which means that they're unable to sell the Bitcoin to buy their own shares. If you were in a true ETF, if the net asset value gets out of whack with the share price, then you sell the Bitcoin to buy the share, and otherwise you sell the share to buy the Bitcoin, but you're keeping sort of a one-to-one, arrangement. But with a closed-end fund, you can actually trade at a discount.
Right.
And you could trade at a premium, which is not a problem. But when you trade at a discount, the problem is there's no mechanism for the management team to arbitrage out the discount. They're not an operating company, so they can't take on leverage and they can't really buy and sell their shares, easily. It's a one-way thing. So the GBTC in particular had a 2.5% fee, but then when it trades at a 25% discount, that starts to look like a 3.25 or 3.5% fee annually. So now you're at 350 basis points, but 350 basis points forever times 20 means that 70% of your assets are being eaten by the fee over the course of 20 years, right? So that just gets extremely expensive, right? And there's just a lot of uncertainty about how that gets cleared. So
do you think it'll be converted into the spot ETF? Do you think they'll win the lawsuit?
I do think it'll be converted. I'm not so sure they'll win the lawsuit. Legal actions are very uncertain. You could be 100% right and you're 50% likely to win. So you could be. Sometimes people are 100% wrong. It seems to me, and they're still 30% likely to win. And it's very difficult to find a universal objective arbiter of right and wrong. So generally, what happens is you spend 5 to 10 years spending a huge amount of money going back and forth with a series of motions and appeals, and you settle 10 or 20% of the matter, and eventually everybody just gets so tired of the litigation that they settle it somehow. So I think that that the regulatory action on the part of the regulators and political pressure will resolve the issue before the court system resolves the issue. But that's just my opinion. Even if they won the lawsuit, there are so many grounds for the regulators to appeal it, to stall and delay, or bring up other issues that it seems to me that it's very challenging there. So what I think though is there's a lot of political pressure and a lot of momentum to approve a spot ETF. And it's going to be very difficult for the regulators to approve one, but not the rest.
Right.
That'll be an interesting political football, how they do that. The ideal thing, the right thing to do would be to approve them all at the same time. But the next best thing to do would be to approve them sequentially as the action comes due. It's going to be pretty difficult to defend approving some and not others unless you can point to a lack of confidence in the management team or some other mitigating factor that would imply that you should deny it in order to protect investors. But in this particular case, denying Grayscale's conversion wouldn't be protecting investors if it results in a perpetual lingering discount to net asset value. So I would think that their fate is the same as all the other spot ETF fates, and so that's that. Now so we've worked our way through Bitcoin, the spot ETF, the futures ETF. Then you've got MicroStrategy and you've got Bitcoin miners. MicroStrategy's a levered Bitcoin operating company. So on one hand, we have an operating business with exposure to business intelligence and artificial intelligence. It's a $500 million business that's a cash generator. So that business is diversified, and it's just a diversified enterprise software company generating cash flow. But it's an operating company. It's as opposed to an SEC 40 financial company. And the difference, it's a very important distinction, is an operating company can take on leverage. Like an operating company can issue $1 billion of bonds at 0% interest. And that's what we did. Or an operating company can issue a $650 million convertible bond at 75 basis points of interest. And we did that. You couldn't do that with trust. You couldn't do it with like an ETF, right? They're just not allowed. They can't go and they can't pledge or hypothecate or borrow against the underlying assets. So because MicroStrategy can do it, we are able to raise $2.2 billion of capital or debt capital at a blended interest rate of 1.6%. And let's say 1.7 billion of it is convert, which means it's not secured against anything. Like there's no recourse. So to the extent that we issue convertible bonds that are backed by the stock of the company and people believe the stock is valuable because it's backed by Bitcoin, we're in essence borrowing against Bitcoin, but we're not pledging the Bitcoin. So we don't have to pledge the asset. There's no margin call risk. There's no mark to market risk. So that means that we can go and borrow money at a low interest rate at a long duration. Like we could borrow money for 5 years at 1% interest or 2% interest, and not pledge any assets and then invest in Bitcoin. So we're fairly unique in that regard. There really isn't another company that has issued convertible debt, senior secured debt, or equity to buy Bitcoin with it. So we're a levered long Bitcoin company, and we don't charge a fee. So although we custody $4.6 billion of Bitcoin, right, 1% fee would be a $46 million a year bill, but we don't charge the fee. We generate a yield, right? We generate the yield by generating cash in the enterprise software business and buying Bitcoin with it. And we generate a yield by doing accretive financings of equity or debt. And so all of those are different levers we have, and we can leverage, deleverage, we can issue debt, we can retire the debt, we can issue equity, we could buy the equity back if we wanted to. We could sell Bitcoin, we could buy Bitcoin, right? We have all options. We're an operating company. And the price we pay is we have to make lots of disclosures, right? So you see there's 200 pages in our latest 10Q. So hundreds and hundreds of pages of 10Qs, 10Ks, 8Ks, where we are, if you want to know all the details of our debt instruments that we issue, you can read them all. If you want to read a 100-page prospectus on the risk factors of the equity we're going to sell, you can read it all. So we've constructed an operating company, and our strategy is we don't charge a fee. We find a way to generate a yield for our shareholders. And then we use a little bit of leverage, responsible leverage, and that would allow us to outperform Bitcoin if we do that well. And that being the case, like if you hypothetically generated a 2% yield instead of charging a 50 basis point fee, right? Then you could look at that and say, well, getting paid 2% forever versus paying 0.5% forever is like a 50% difference. So you can generate a premium against the underlying assets by actually intelligent leverage or yield. And we can tap into the volatility of our stock and a Bitcoin in order to make that financing cheaper. The reason that our debt is not the industry standard 7-8% is because we've got a lot of convertible debt, and we're able to borrow money with convertibles much cheaper, like 0% interest, because the people that are buying those bonds want to be able to trade the volatility. They want to arbitrage the volatility, right. And so they'll give us the debt cheap. So these are all arrows on our quiver. The positive is we can actively manage the business. The difference between us and a spot ETF, though, is like if someone wanted to buy $10 billion of MicroStrategy stock, it would distort the price and the ratios. And so there's not enough room in the capital structure to do that. But if you wanted to buy $10 billion of Bitcoin through a spot ETF, they would take your 10 billion and then they would buy the 10 billion of Bitcoin, and then the relationship of net asset value to the stock would be 1-to-1. So you can put infinite capital into a spot ETF. You can put $100 billion into it. There isn't that much room in the capital structure of MicroStrategy to put in that kind of money, right? We're a special purpose vehicle, and for a certain number of shareholders, we can actually give them a differentiated offering When our capital structure gets too crowded, then our premiums against net asset value will get to a point where people will decide they would rather buy the underlying asset. So we're unique, and that just leaves us with the Bitcoin miners. And what you would say about the miners is that they have extreme leverage to the upside when Bitcoin is good because their revenues go north, their balance sheets go north. And they have extreme leverage to the downside when Bitcoin goes the opposite way.
Right.
And so they're sort of extreme levered plays, right? And they have a business with exposure to electricity, and then there's execution risk and there's competition. So you would have to analyze each one of those individually, and it requires a very sophisticated and a different model, right? And at the end of the day, they all appeal to a different type of investor. MicroStrategy appeals to, for example, convertible arbitrageurs. There are people that have large pools of capital, but they're only allowed to buy convertible debt. If you don't create convertible debt, they can't invest in you, right? There are people that can only buy NASDAQ traded equity, right? There are people that want to trade options. So ultimately, instead of saying, well, there's only one right way to do it, right? That's kind of an exclusionary view. I think a more expansive view is there's a lot of ways to do it, and the world needs a lot of different ways to do it. I mean, in China, if they want to embrace Bitcoin, they need securities and assets to trade on regulated Chinese exchanges, right? And in every other country on earth, they're going to need all sorts of local assets and local on-ramps, and the laws are going to change, and the custom is going to change, and the needs are going to change as a function of jurisdiction, and they'll change as a function of institution or investor type. And so the beauty of Bitcoin is people can do 100,000 different things with it at the same time, and you can think that the other person is doing it in a stupid way, and if it's true, then they're going to lose their Bitcoin, and that'll solve that problem. I mean, if you loaned your Bitcoin to FTX or to Celsius, that was unfortunate and tragic, but you lost your Bitcoin. And I guess that's the market's way of saying don't trust people like Celsius and FTX, right? But it is the market. The market is going to be lots of people doing things that you don't understand. Some of them will look scary. Some of them will look stupid. Some of them will look brilliant. Some of them will look brilliant, but not for you. Right? It's totally reasonable that 85-year-old blind person would want to buy Bitcoin through JP Morgan. But it's totally reasonable that 35-year-old not blind person who's computer whiz would not. And so I think the idea is live and let live. Let everything develop. The economy is going to grow at the fastest rate if it has the least number of constraints. And someone is going to do something that you didn't figure out or you don't understand, but it's going to be good for Bitcoin and it's going to be good for you. And so I think the best thing we can do is just relax and let the market do its thing, because 8 billion people and 100 million companies have needs and desires and talents, and constraints that you don't understand.
Well, I agree with you there. And, you alluded earlier to the fact that there is only one digital asset that's endorsed by name by presidential candidates. And something that happened recently was RFK Jr. saying that if elected, he would back the US dollar with Bitcoin or potentially back a basket of US treasuries. Do you see that as being possible? There was actually a lot of criticism of that comment by hardcore Bitcoiners saying you can't back something with an infinite supply with something that has a finite supply, and others saying, finally, maybe this is a return to monetary policy that isn't just money print or go burr. What are your thoughts on that? Is it possible to back the US dollar with Bitcoin someday? It's time for another quick break to hear these messages from my partners. Next up, I want to share with you about CrowdHealth, which is a Bitcoin alternative to health insurance. Health insurance costs are sky high today, and you send your money every month to a massive corporation, and then you never see that money again, even if you don't need a doctor. But if you do need care, you end up having to pay even more out of pocket, especially if you end up as one of the 20% of claims on average that aren't covered. With CrowdHealth, you pay a small monthly fee that goes into an account that you accrue over time and is yours to use or keep if you ever leave. And you can even convert that money into Bitcoin. CrowdHealth is all about community, and the community crowdfunds everyone's healthcare. So if something happens to you and you need medical care, CrowdHealth negotiates down the medical bill lower than what insurance would be, and then the community helps you cover it. And in turn, you help cover others' needs, which has been so rewarding. I am so glad I switched to this program. And for more information, you can head to joincrowdhealth.com/Natalie and use promo code Natalie for a discount. I am so excited to share that I have joined Orange Pill app as an advisor. If you haven't downloaded this app yet, you are missing out on connecting with Bitcoiners in your area. The Orange Pill app is building the social layer for Bitcoin and helping to create opportunities for in-person connections and community building. You can create a profile and you will see lots of familiar faces there. And then you can search for Bitcoiners or Bitcoin events based on your location. I am geotagged in my home base, St. Louis, and I'm super grateful because the Orange Pill app has helped connect me with Bitcoiners in my new city. So come join us, download the Orange Pill app, and head to theorangepillapp.com for more information. All right, back to the show. What are your thoughts on that? Is it possible to back the US dollar with Bitcoin someday?
You know, on Twitter, people are constrained to short tweets. And so sometimes people get in fights over semantics. And so we're arguing over the use of the word back. And if a politician said, I'm going to enhance the United States by owning some Bitcoin, or I'm going to enhance the credibility of the central bank by having them invest in Bitcoin, I don't think you would have seen the same degree of combativeness. I think that it's, you know, a lot of times people create these extreme cases so they can disagree. but let's take another view of it, which is it good for a bank to own some Bitcoin or not own Bitcoin? And the answer is it'd be better if the bank owned some Bitcoin. Is it good for a country to own some Bitcoin or not own it? I mean, you're better if you own it. Is there any entity on earth that wouldn't be better off owning Bitcoin? I can't think of one. I mean, if we think Bitcoin is good, then why wouldn't you think it's good to have some, right? If you take 1% of the assets of the central bank and you buy Bitcoin with it, you haven't backed the dollar with it. That's true. You have enhanced the credibility of our reserves by owning a hard asset. You would, on the margin, let's take an extreme, right? If you had $100 billion of assets and they're all Bitcoin, yeah, we'd like that better than 1 billion of assets in Bitcoin and 99 billion in something else. And we'd like a billion in Bitcoin better than 0 Bitcoin. So I think they're all just degrees of quality of the balance sheet. I think that the question of when is something backed by Bitcoin, right, is less important than are people choosing to adopt Bitcoin as a treasury asset and incrementally or gradually accumulate it. If you have, I'll give you an example of another extreme, right? Turkey. Well, if Turkey has a balance of payments problem of 20 billion a year, like if they're basically running a $20 billion a year deficit, and if they had $50 billion of gold, if they chose to sell the $50 billion of gold and buy $50 billion of Bitcoin and then announce to the world that they're going to back their currency with Bitcoin, or right now, did you know they're backed by gold? I mean, they're sort of backed by gold, but it's not helping them because gold isn't appreciating in value over time. And so it's not really helpful. And the definition of what does it mean to be backed by? Do you need to be 100% or 1,000%? I mean, it used to be we were on a gold standard backed 10% or 20% by Bitcoin. So I'm going to leave off the semantic question of what percentage coverage do you need to call it back. But I would say if Turkey adopted Bitcoin as a treasury reserve asset instead of gold, and they announced it to the public, they would start a run on gold and they would start a run on Bitcoin, what would happen is Bitcoin would double or triple, gold would crash, other countries would follow their lead. Their 50 billion in Bitcoin would become 150 billion in Bitcoin. And Bitcoin, as you know, I think my view is over 100 years, Bitcoin's going to appreciate theoretically 15% a year. So if you were holding $150 billion of Bitcoin, appreciating at 15% a year, you can reasonably say to the general public, we're generating $20 billion of Bitcoin gains every year, and we're offsetting $20 billion of an operating currency deficit every year. And we have now effectively backed our lira. And now people would look at that and say, I guess the lira should strengthen. So the lira would strengthen. You would plug the deficits with Bitcoin. Gold would crash as a money, but that's okay because gold's not working anyway. All the people in Turkey would be benefited. And so that's an example where if it's a small enough country with a small enough problem and they take a big enough chunk of Bitcoin, then you can actually meaningfully move the economy or move the currency. Now that's a lot of Bitcoin to buy, right? You could say maybe 50 billion is unprecedented, but now if we went to a smaller country, and there's a lot of smaller countries, that had a currency with a much lower float, you can see how if they adopted Bitcoin as their primary treasury reserve asset and announced they're backing the currency with it, they could issue their currency, they could generate reserve returns and strengthen the entire nation. Sovereign wealth funds do this, right? In Norway, in Saudi Arabia, in UAE, in Singapore, they have sovereign wealth funds, or they have sovereign funds, and the goal is to make investments in assets that will appreciate in value to back their currencies. And they use those portfolios either to engage in open market transactions to stabilize their currency, or they use it to show that they are backed and financially solvent. So the idea of adopting Bitcoin as a reserve asset at the sovereign level isn't unreasonable. I think 1% is a huge commitment for the nation of the US, right? When someone has $100 trillion worth of whatever, trillions of dollars of exposure, and they say 1%, that makes sense. I don't think it'd be responsible for, a presidential candidate to say more than 1% right now, given the fact that Bitcoin isn't really big enough to take that kind of demand. I think if you run a country, Monaco, Singapore, right, a smaller country, then I think you could probably go to more than 1%. And I think that I don't choose to dwell on the debate about whether 1% is backing. I get it. You could say it needs to be 50% backed before you use the word back. But I think that the more important point is, should a sovereign hold Bitcoin as a treasury reserve asset, and what can you expect to accomplish? And I think for a mega company, it's symbolic, and it will be good for the country and economic development in the country. But it doesn't necessarily solve your inflation problem or your currency problem. But for a smaller country, for an Argentina or Turkey or Lebanon, or Nigeria, if you're attempting to establish credibility for your currency on the world stage, right now the lira, the peso, the naira don't have much credibility. If you were to announce that you're actually adopting Bitcoin as your primary treasury reserve asset and backing your currency with Bitcoin, I think you have a lot more chance to actually move the needle on your currency strength and change the perception of your nation and change capital flows. So I think it would be meaningful at that level, depending upon how much of a deficit you're running. Right? When the deficit is 20 billion and you have 50 billion in Bitcoin assets, you can make a dent. But when your deficit is, when you only commit $1 billion in Bitcoin against a $20 billion deficit, well, that's just not enough to make a difference. So I think there's a case by case issue, and I don't think it's constructive to get into debates about whether the sentence should have been constructed with the word backed as opposed to invested. I think that the material thing is, are you adopting Bitcoin as a treasury reserve asset, primary, secondary, one of 100, one of two, one of three, and what percentage?
Well, and I guess one of the takeaways is the US shouldn't be selling its Bitcoin like I guess the plan is. I wanted to turn now to ask you a couple questions about the halving, because we've talked about so many bullish indicators, the FASB rules changing, the spot Bitcoin ETF, which might be approved very soon. And when we talk about the halving coming up, you came in just after the last one, and typically it has coincided several months later with a new all-time high or a significant bull run. So what will spark the next bull run, and what's your take on the halving?
The halving will be one of the big milestones over the next year that drives Bitcoin adoption. There's no doubt it's a technical milestone. If you have a $10 billion commodity supply each year and you cut it to $5 billion commodity supply, that's going to put technical pressure on the marketplace. The FASB initiative to adopt fair value accounting will be a second big milestone. And approval of a spot ETF will be a third big milestone. Approval or endorsement of a regulated crypto exchange by the SEC, if they recognize an exchange, or certify or endorse one, that'll be a fourth big milestone. Any kind of other guidance, constructive guidance issued by the regulators out of DC would be a fifth big milestone. So I think those are all the major milestones we can look forward to. I think that it's technically it's like I tell you that there's a neighborhood and all the houses are beautiful, and I'm building a school, the best school, and I'm building the best park, and I've got horse riding stables, and I've got a beautiful beach, and I'm dredging a channel and creating a beautiful marina, and we're going to have a concert series of the 100 best musicians in the world playing each day for 100 days, starting next April. I tell you that, and you think, man, I really want to move to that neighborhood or that development. And then I say, well, the bank won't finance the purchase, so you have to pay for everything in cash. And you have to jump through hoops, and you got 6 months of, there's 6 months of application processes, and you're going to have to apply and wait 3 months and do something else and wait 3 months. So it's like, I know I want to be there, but it's still hard to get there. But yeah. I know I want to be there. I think that's where we are right now, which is all of these things are lined up, but you can't underestimate the value of having the bank say, okay, we'll now actually do financing against houses in this development. We'll give you mortgages, 100% loan to value, 80% loan to value. Right, that makes a big difference, and it's a conventional mortgage. So I think that once all those planets align, then I think you have like a surge of capital migration.
Well, I have to ask you, because if you're passionate about Bitcoin, you're obviously watching the greater economy, Fed trying to navigate whether there's going to be a soft landing, and I see kind of two narratives right now: this inflation versus deflation tug of war, as some people call it. Some are saying that, at some point we're going to hit that hard landing. They're going to have to come in and print like they've never printed before. Others are saying that there's just a shift in the regime. They're not going to allow for this kind of quantitative easing that has happened before, and how that will impact everything, including liquidity for Bitcoin. Can you maybe sift through the noise that we're hearing out there? What are your thoughts on the macro picture and its impact on Bitcoin?
I think that the most important place to start is to recognize that every conventional economic metric that is talked about in mainstream media or in mainstream political conversations is a man-made fabricated metric. It's just a synthesized metric that is created, named, and defined and measured by an interested organization that has a vested interest in creating a certain effect. So, for example, the employment statistics. Well, if 40% of the people don't work, how can we be at full employment? Because I redefine the employment number to not include people that stopped looking for a job, right? Inflation. The current inflation is core inflation. That's the change in prices, not including the highly volatile food and energy. Okay, so if I don't use energy and I don't use food and I pick other things, any arbitrary things, and I measure them in any arbitrary way, I can generate any arbitrary number. But what number do I want? I want a low number because I've indexed pensions and indexed my cost to that number. So the inflation is just a synthesized number two. We made up the one we wanted. How about the size of the economy? The GDP is growing. Well, if I shut down the economy for 2 years and nobody could buy 1/3 of the stuff they used to be able to buy, how is the economy growing? And the economy is growing if I print 40% more money and I measure the economy in the money, then the economy could shrink by 30%, but the GDP is said to have grown 2%. So I'm changing the definition of the economy. An economic unit used to be worth 35% more 3 years ago. So all the labor statistics, all the monetary statistics, all the inflation statistics, all of these things, the definition, like, will we have a soft landing? Well, of course we'll have a soft landing because it's politically advantageous to have a soft landing. So how do you create a soft landing? You simply define a measure of the economy that you know will land softly, and then you go and you track that and you report that. And there are parts of the economy that had a hard landing, but we simply don't report that. Just like if it turns out that it's too expensive to buy ribeye steak, I just remove steak from the CPI market basket and I normalize boxed cereal.
Right.
And then if I want to be extreme, I say not only is boxed cereal the new norm, I'll say it turns out that steak is bad for you anyway. We heard it gives you a heart attack and kills you. So I can actually change the definition of the economic unit. So my point here really is everybody's looking at this, debating these numbers. But all the debates are fabricated such that everybody's being told what to focus on, and the things they're focusing upon aren't really necessarily relevant. It's like when you have a kid and you want them to pick either the pink, curtains or the green curtains for their room. So you give them a choice of pink or green or ugly psychedelic polka dot. And you let them choose. And they go, well, mommy, I hate ugly psychedelic polka dot. I'm not sure about green or pink. I guess I want pink, right? Did they choose? Did it happen? We're giving people this, these set of distorted metrics. What's going to happen is our manufacturing ability is we're going to manufacture more stuff generally better, except when the government shuts down factories, which they've been doing with the trade war. The AIs are going to create more information content stuff, more virtual stuff, infinite more, and the price of that is going to go down. If you want to measure things that technology impacts, it'll be deflationary. And so if you put them all in your market basket, then there's going to be a soft landing because we're going to find out, you know what, this year, I've never had a greater supply of streaming video television shows and movies to watch in my entire life. In fact, I could say I probably have 100x more streaming television shows to watch this year than I did 5 years ago. So did the economy grow by a factor of 100? It did if you count each streaming video I watch as one unit of output. But on the other hand, there's a piece of electrical equipment I ordered, a transformer switch 4 years ago. I still can't get it.
Wow.
4 years later, there's certain products that used to be produced that aren't produced. We mothballed a third of the airplanes. We mothballed all sorts of things. There's all sorts of businesses that are out of business. There's all sorts of diversity of goods and services you just can't buy anymore. But if you don't ask for them and we don't count them, then they didn't go away. So I guess what I'm trying to say here is there's a lot of conventional debate in the macroeconomic sphere about conventional synthesized metrics. And the GDP results don't track the economy. The inflation results don't track the price of stuff. The rate of change, sector to sector doesn't necessarily track what you think it tracks, because the people that create the metrics have too much flexibility with regard to what they choose to measure and how they choose to measure it. There's an old saying in the propaganda business: you can't tell people what to think, but we can tell them what to think about.
Mm-hmm. Very true.
Right? So I can create a crisis by lassoing a set of commonplace events and putting them all on one page and like shining a flashlight at it and saying, you have to cope with this, you have to address this. And I can diffuse a crisis by simply ignoring an overwhelming set of negative events. And so ultimately here, when you say, well, is it going to happen or is it not going to happen? The real question is, what is the government going to want to happen? What is the mainstream consensus going to want to happen? And when we shut down the entire world for 2 years on television, stocks were going through the roof and people were, Jerome Powell lowered the interest rate to 0. Everybody said, this is great for stocks. It's a party for stocks. Everybody made a fortune in the next 8 weeks. And they're completely diverged from reality, right? We delaminate from reality and people talk about synthetic interpretations. So ultimately, that's why I wouldn't engage in discussion about will we avoid the hard landing? Will we have the hard landing? Is the economy shrinking or growing? You're debating about whether there's mainstream people are debating whether we have 2 or 3% inflation. Mm-hmm. The true monetary inflation is 10%, except where it's 20% or 30%.
Right.
And yet they're debating between 2 and 3 because that just keeps everybody in a comfort zone, because people would literally freak out. But if they knew, if they had a raw number. So I think oftentimes the popular mainstream debates are over manufactured, synthesized metrics, which are all wrong, right? And they don't address the elephant in the room, like the fact that 40% of the people aren't working. Should they be?
Right.
Not is the unemployment rate moved from 3.1 to 3.2 or from 3.1 to 3.0, right? I mean, that's irrelevant. So I think that we will always manage these things so as to kick the can down the road and avoid acknowledging, anything that's terribly disturbing in the near term time frame.
That's true. I understand that. Well, before we start to wrap up, I wanted to ask you, because, you focus so much on the message that Bitcoin is hope. And when you look out at the cost of living and the average working person and their struggles. We're seeing now, I used to report on it when I worked in the news industry, how the average family can't afford a $400 emergency, and people are running up their credit cards. We see credit card delinquencies going up, and some of these indicators, that our economy is going in a certain direction. And so I was wondering, what is your advice for the folks out there who, 50% of Americans don't have assets, they don't own stocks? Is it just accumulating Bitcoin, or what is your advice to that average family who doesn't have savings and lives paycheck to paycheck to start accumulating wealth and financial freedom for themselves?
Well, my number one advice is just dollar cost average into Bitcoin. And if you have money that you don't need for the next 4 years, that money you sweep into a Bitcoin investment. Bitcoin's the apex property. And then you let time work for you. The longer amount of time you have, then the better off you'll be. I generally think, Bitcoin is the apex property. The conventional mediocre properties are either high quality real estate or high quality stocks, the S&P index. If you wanted any other idea, like today, I would hold extremely highly desirable real estate that everybody's going to want, or unregulated monopolies that are big tech, unregulated digital monopolies. But both of those are inferior to Bitcoin by a lot. So if you want a diversification, you hold unregulated digital monopolies, and you hold extremely luxurious, desirable, prestigious real estate. And everything else is probably going to be a loser. Holding cash, holding bonds, holding any other run-of-the-mill stock or whatever. It's just the world is too risky. And in terms of how you accumulate wealth, you have to work pretty hard at something, whatever it is. You have to be good as a doctor or a dentist or IT professional or whatever. You have to do something to generate cash flow. And then you look to acquire the apex property, using your cash flows or using equity or using debt, intelligent debt, right? If somebody, if you could have gone back 40 years and someone would have loaned you money at reasonable terms in order to buy, a city block in New York City or Tokyo or London, you would have done okay. And that's reasonable. You buy high quality, levered long property. But it has to be intelligent debt that you don't get liquidated on. It needs to be a long-term mortgage or very cheap debt that no one's going to call on you. Otherwise, if you could raise equity, right? If and to do something, if someone's willing to invest in you, you're a money manager, and so you go and you raise capital, you invest it in Bitcoin, run it for them, then that's a business. Or if you're a business, if I had a business and I could sell equity in the business so as to buy Bitcoin, that's a rational way to do it too. So you can use equity, you can use debt, or you can use cash flows. And so those are the three ways you get the money to invest. The mistakes you make on the getting of the money is when you borrow the money at too high an interest rate. Like, don't borrow on your credit cards, right? At 20% interest. Not good. Or when you do a 20x margin loan on FTX and you get forced liquidated on a Saturday night while you're sleeping, right?
Right.
So you don't take bad impermanent capital or expensive capital. That's a mistake. If you sell equity to loan sharks, or mobsters, and they shake you down and screw up your business, that's probably a mistake too. So don't raise money from the wrong set of people. Don't take on debt that has bad terms. And with cash flow, obviously you sell your chairs and you keep your personal cost as low as you can, but I can't tell you how low you can make it. You have to decide yourself. The mistakes you make on the investment side are investing in lots of little companies with a 99.9% chance of failure. That's, speculating in tokens, speculating in companies, as we saw in the S&P 500, 95% of them won't perform even out of the top 500 companies in the world. Most of them are mediocre and they can't keep up with the monetary inflation rate. So trading, thinking you can trade is overconfidence. There's statistically a 99% chance you'll fail. I think in one of my presentations, I showed like literally 1% of the days is all the movement. So if you're trading the other 99% of the days, you're probably failing.
Right.
So there's a 99% chance you'll fail if you try to trade. There's a 99% chance you'll fail if you try to pick stocks. There's and that just leaves you with the basic notion, which is proper asset allocation. You pick apex property that what do you want to own? Here's some simple rules. You want to own something that in a decade, a person richer than you and smarter than you will want to buy from you. So imagine the international globe-trotting billionaire, right? That went to Ivy League schools and has a PhD and is super smart and smarter than you. And in 10 years, they show up and they look at what you own and you offer to sell it to them. And ask yourself the question, will they want to buy it? If the answer is Bitcoin, the answer is yes. But if the answer is like a bed and breakfast, in the middle of sub-Saharan Africa in a war zone, the answer is maybe not. And if the answer, and if it's Leonardo da Vinci's Mona Lisa or something, probably yes. But if it's like the 97,000th, print of the 97,000th most famous artist, maybe no. So do the globe-trotting billionaire test, right? Call it the Bernard Arnault test, right? would Bernard Arnault want to buy your thing in a decade? And if the answer is yeah, then that's good. And then the second question is it easy to manufacture it using machines and factories? And if the answer is yes, it's probably not a good investment. And then the third question is, can the robots make more of it, or can the AIs make more of it? And if the AI bots or the robots can make more of it, then probably it's not a good investment. Like those 25,000 crypto tokens that took you like 4 hours to create. Well, the AIs are going to create them in 4 seconds. And pretty soon there's going to be 25 million of those crypto tokens. So
right.
What is it that the robots can't make more of? What is it that that AIs can't make more of? What is it that the government can't print more of? The government can make infinite currency. It can make infinite bonds. Companies can make infinite stock. And, we can make infinite music, infinite art, infinite entertainment. You can't make more 1 acre properties in Palm Beach. You can't make more acreage on the beach in Miami or Palm Beach. You can't make more land with a robot or a factory. So land in the Hamptons, like highly desirable beachfront property where all of those billionaire, rich, erudite, educated, beautiful people want to live, that stuff is probably valuable. Yeah, unique things in Western civilization, right? The Mona Lisa are valuable. Scarce, desirable assets. Bitcoin is valuable. All the AIs taking over every computer on Earth can't make more Bitcoin. All the governments can't make more Bitcoin. All the factories can't make more Bitcoin, right? So once you figure that out, then it's pretty clear if you're not going to just be all in Bitcoin maximalist, then you want to diversify, buy things that human beings and robots can't make more of, and then you'll probably be okay.
Well, it's great advice. You said you were bullish at the top, so I'm going to end this on a fun note, Michael.
Okay.
Would you say you have big Ken energy, or do you have Ken energy?
I'm doing my best to channel big Ken energy. Ken energy for the win.
Have you seen Barbie?
I haven't seen it, but my view is a little bit of Bitcoin injected into the entire Barbie franchise makes it better.
I agree.
Bitcoin makes everything better, and Barbie with Bitcoin is better. Even Ken with Bitcoin is definitely better.
Yeah, we need more Bitcoin Barbies. All right, Michael, it's always a pleasure and an honor to speak with you. Thank you so, so much. I'm going to link all of your amazing resources, your websites, your educational links, and obviously your company, MicroStrategy, in the show notes. Thank you so much for joining us, and we hope to see you soon.
Thanks for having me.
Thank you so much for watching the video version of this show. I really want to hear from you. If you have suggestions or guest recommendations, you can email me at natalie@talkingbitcoin.com. Please subscribe if you want more content, and I'll see you next time.